The following is a presentation of TFNN. The Bull Bear Nadex Options Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Bull Bear Nadex Options Hour. Now, Tom and Tommy O'Brien.
Morning, everybody. I'm Tommy O'Brien, joined by our man, Mr. Basil Chapman, this morning, filling in for Tom. Basil, good morning.
Good morning, Tommy. How are you?
I'm doing well. How about yourself?
Very good, thank you.
Great to talk to you as always. It's been a little while since we've hosted the program together. Looking forward to a fun hour. So, starting things off, we get the Dow up 168 points, folks, up almost 0.2%. S&P is currently positive by 15. About 0.6%, and NASDAQ leading the way, as seems to be the case, usually up 65 points or more than 0.8%, trading at 8,019. You got gold trading higher to the upside. You have oil pulling back a bit on the storm, potentially weakening just a bit over in the Atlantic. And we got some action in earnings. You got Kroger jumping over, one of the biggest chains in the country for groceries. Kroger down almost over 10% this morning, trading at 28.39. You want to talk about volatility? You want to talk about earnings? Let's go over to our man, Mr. Kevin Hinks from TD Ameritrade Think or Swim. Right here, folks, 11 a.m. every market day. Fast market. Kevin Hinks, Tom White. They're talking options. They're talking defined risk. They're talking earnings. Kevin Hinks, good morning.
Good morning, Tommy. Good morning, Basil. How's everybody doing?
Good morning.
We're doing well, man. How about yourself?
Good. I have so when you guys get I have a question for you guys in Florida. If you get Tommy, if you guys get a storm like this, do you have any effect at all where you guys are? Do you see any change?
We haven't really felt anything yet. We haven't. You know, we might get some of the outer bands, I think, barely. Yeah. Really, this one is even, I think, just even a little bit further than would feel anything in terms of coming in. So we're in Tampa, which we're fortunate to be in Tampa down here, Kevin, in that we're on the west coast of Florida. Right. So it's pretty difficult for a storm to hit us. Thankfully, the east coast of Florida catches so many of the storms coming through the Atlantic. But in Tampa, for this one, I think, you know, we might catch a few of the bands, but we've been getting a lot of rain. It's our hot season. It's our humid season for sure, but we get those afternoon, you know, humidity showers. But fortunately for this storm, we're okay, and hopefully in the Carolinas, man, they just stay safe, because I had mentioned it's weakening a bit, but folks, it is a monster out there. So if you're in that path, be safe. Category 2, Category 3, whatever it is, be careful, buckle down, and make sure you're safe, and then rebuild whatever you got to rebuild after that, because it is a beast out there.
Good for you. That's good for you guys, Tommy. But you know, for those people on the East Coast, it's not going to be the wind; it's going to be the water.
Exactly. So, right. Those storm surges.
Thinking good thoughts.
No, send in some good white light over there, because that you're right, Kevin. It's the storm surges that so often can really put people in danger, where you get those immediate floods that come out of nowhere. And just make sure, if you're on low-lying ground out there, we got a lot of people. Our man John Logan out there, people familiar, Taz, he's out there in the Carolinas. Just stay safe, make sure you're in a good place, and ride it out for sure. Yeah. So this market, Kevin,
Tommy, you were talking about crude oil this morning. I'll tell you what. I don't know if some of you guys saw the IEA report that came out. It broke pretty late because it comes out of Europe, or it broke pretty early this morning. But global oil production hit a record 100 million barrels per day in August. Wow. So that's what's keeping oil a little bit heavy this morning. So, you know, OPEC output, 32.63 million barrels per day. So, you know, everything's cranking here in terms of oil production. Remember, the IEA, they're an independent body, so they give what they see. So, you know, it looks like Nigeria, Saudi Arabia, Libya, Iraq, all their production is up, more than covering for the negative in Venezuela and Iran.
That's pretty remarkable, Kevin. I was just jumping around CNBC.com. I pulled it up. Yeah. So, although the oil market was tightening at the moment, the world oil demand will soon reach 100 million barrels a day. Pretty remarkable number, man, for sure, as this economy marches on. We had the jobless number this morning, right, Kevin? I mean, big number there as well in terms of jobless claims. I think a low back to 1960. Say that again?
204,000.
Yeah.
It's that's a weekly number, but that is indicative, as you know, of a tight labor market. Only 204,000 first-time filers for unemployment insurance.
It's pretty remarkable across the board. It seems like new highs on a continual basis and new lows in terms of jobless numbers and unemployment on a continual basis. It's almost becoming par for the course that every time we get an economic indicator number, that it's something that is almost breaking records. And in this case, jobless claims, lowest level since December of 1969, the Labor Department said, as this, the economy, as you said, marches on. One of the stocks not marching on, Kevin, I know you guys were talking about it yesterday, Kroger, right? Quite a number. I referenced it in the update. I got the chart up there on the TD Ameritrade Thinkorswim platform right now. 11% haircut almost overnight, down $3.25 as they come out with their earnings, and not quite what they were looking for.
Exactly, and they did have a beat on earnings per share, but they guided a little low. Actually, they kept their guidance for the year intact, but the same-store sales came in a little weak. And as you know, in retail, they all look at same-store sales. And though the CEO was on TV this morning talking about they basically had guided to this number because they're redoing 600 stores, and that's going to, by definition, weaken a little bit of the traffic in some of those stores that they're doing. So, yeah, they came in 41 cents versus 38 expected. Same-store sales a little weak, 1.6% versus 1.9 expected. But like I said, he still guided to a strong second half of the year. I thought his accounts and his comments were pretty positive.
It's pretty remarkable that when you're priced for almost perfection, I guess, and you don't deliver exactly what the market's looking for or a beat across the board, that you can see a haircut like that. And we've talked about it many times. You guys talk about it on the program in terms of the competitive nature of that industry in terms of, groceries. You got Amazon getting in Whole Foods, and, man, quite a haircut for sure. So what else
we got? As you guys know, Kroger's a big company. Well, today on the show, we're going to obviously talk about oil. We're going to talk about Kroger again. We'll deal with Ben Watson is going to talk about Micron, right? Micron and the move that it's made and everything going on with Micron. We're going to cover that today and look at it from a technical basis. In our cash tag segment, Andy Swan is going to talk about Adobe, and then we're going to take a look at Walmart. They've got some news out today where they're talking about selling Nike now through Walmart and through their Jet.com. So interesting to see how Walmart is doing today.
I saw that headline, and that is interesting in terms of Jet.com and how they tried to increase their online presence dramatically, right, through that Jet.com acquisition, and then trying to team up with potentially the leader in that retail sneaker sector, shoe sector, Nike.
Right.
But you got Walmart on that heels. They're down about 0.8%, quite a number this morning.
Interesting action based on that news.
Yeah. Well, Kevin, we appreciate it, man. We look forward to the show. Lots going on, folks, whether it's oil, whether it's Kroger, whether it's Walmart, right here, 45 minutes from right now. Kevin, Tom, the whole team, TD Ameritrade Network, Thinkorswim, they're going to be breaking it all down for you. Kevin, we look forward to the show. Thanks so much for the update, man. Have a great weekend, and we look forward to talking to you next week.
Thank you, Kevin.
Thank you for having me on.
Thank you, man. Come on back, folks. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Tommy O'Brien, joined by Basil Chapman this morning, filling in for Tom. We got markets hanging in positive territory. Dow up 171, S&P's now up 17, and NASDAQ up 83 points. So, Basil, what's been on your radar recently? We got a lot going on in the market. Of course, we had Apple coming out with their big announcement yesterday. How is Apple doing today in the light of all those tech stocks flying? Apple up 1.6%, basically almost back to where it had given up yesterday on that news. Lots going on. So what do you have on your radar this morning, Basil? What have you been looking at?
What I'm looking at is the sector rotation. One of the things that we've seen in this particular market environment is that when one sector is weak, some other sector takes its place, and thereby you somehow or other the indices kind of manage to even out. Let's put it that way, because yesterday the semiconductors were extremely weak. When all the SMHs went all the way down to 102. And 114 is the high for the year, so that's quite a move down. At the same time, we had that sudden spike intraday on the China news where the Dow suddenly jumped 120 points, of which Boeing was a large part of that. Let's see if Boeing is still holding, and Boeing added some of it today, trading in a sideways range between the three. I think it would be about 370, 371 area. That was the high in March, and then the low that was made back in same month actually of 311. So and that added about 45, 50 points to the Dow when it bumped up like that.
Sure.
So one of the things I was looking at is what sectors are lagging that have the potential to rally, have come down quite sharply from them 2018 highs. And I've tried to pinpoint that for subscribers so that we are looking to at least start positions in areas that have been very weak, because I think from everything I'm looking at here, even though there are sudden news-related spikes to the upside, when it evens out, my thinking is that if you look at the Amazons and you can call it the FANG stocks, F-A-A-N-G. Amazon hasn't made a new all-time high since it made the high at the beginning of September at 2000 and what was that, 2050.50.
It squeaked over that $1 trillion mark, Basil, by like 15 pennies, and then gave it up from there.
Yeah, and then gave it up. And that doesn't mean to say that it needs to tank, but it does say that there's a really good chance, based on the daily and the weekly charts that I'm looking at, that there's some kind of consolidation, and it's going to unfold in the real big winners of going into 2018 to the mid-year. And that's the way I'm looking at it. Could be completely wrong, because it's so fascinating. If I go to a Caterpillar, which had been so weak for months, look, the high was back at 173.24. I think it was the beginning of January. Yep, the second week of January, it goes to 173.24, and it comes down to 129.43. That's a 40-point decline, and now it's starting to rally. So this rotation between what was weak and what has the potential to rally if just a couple of things come right. I'm fascinated with that. So for subscribers, we've got a particular sector that I think has the chance now to, we're trying to start positions today. I think we've got one of them. And that is basically to look at what has been very weak, what has started to stabilize, what has some political and geopolitical connotations, to be able to, if things work out, to actually give it more than just a bump, to give it more an intermediate term rally. That's my focus right now. So
yeah, that's quite a pullback on Caterpillar, right? Especially when you put things in context with the economy just doing so well.
Yes, but what economy? You see, this is more related to China. It's more international, where you're looking at agriculture, you're looking at just a slew of economic activity that I think was helping Caterpillar to the upside, because it did involve the foreign countries.
Sure.
And then the domestic part of it was starting to slow down. And now we'll see what happens, because this is a much better move. Trough D in the weekly chart of Caterpillar. Monthly chart still needs some work, but of course you need the shorter term trends to help the longer term. So yeah, I'm fascinated.
That weekly, Basil, the low on that D point you have there, I mean, that's down at almost 130, right? We're now at 145. I mean, you're talking about more than a 10% pop.
So just over a 10% pop in 5 weeks.
Yeah.
Very nice. But it's had pops like this before, and then it went to lower lows and lower highs. If it takes out the left side high of the week of August the 3rd, where the high was 146.70, and of course it's just an eye blink away from that.
Nice.
If it can close above that for 2 weeks, I don't want just one. The 1 week thing is just no good. It needs to have consistency. Have 2 weeks closing above, let's say 145s, trying to get above the left side high of 146.70, and then starts to go to the 148.150 area. I think you've got something that's very interesting. So slowly but surely, I'm looking at areas that have been extremely weak for very good reason, and now we'll see if the internals are starting to improve. Let me see if Deere is acting the same way. Yeah, Deere's doing the same thing.
Yeah.
Deere went from 175 down to 100, and the same thing, 130. In this case, 131.26. Big moves for these stocks.
So I'm going to jump off a little bit, Basil. It's Thursday. We got our natural gas numbers at 10:30. What reminded me of that is I happened to glance over at the Nadex platform. Man, crude oil, these are 5-minute bars we're looking at, folks. Crude just dropped from 69.67, a full dollar since we've been on the air in the last 20 minutes, Basil. Quite a run for crude.
That is.
Pulling back from those highs. So with that in mind, we get the natural gas inventory numbers every Thursday, 10:30 a.m. Eastern Time. Natural gas, we'll jump over to this chart, currently trading at, let's pull it up, 284.93, so almost 295. Natural gas jumping around a few pennies as well today. And so we get that number in about 5 minutes. And what's interesting, nice here is that, Basil, you follow this when we've set up these trades occasionally. You have the indicative trading right at 285. And we like to examine the market and see if we can set up a potential volatility trade ahead of that news. The noon expirations right now, I pulled up first, and what's always nice when these set up is that you have exposure from 285 to 305, 20 cents, and then you have exposure from 285 to 265, as that the price is lining up right where these set off, so you're paying no intrinsic value on each side, and you're only paying for premium. And so you're talking about basically this trade setting up at about $21, which is going to represent about 2.1 pennies of movement you would need from where it's basically trading at right now, which is 285. And that's nice that you'd have until noon, so that just gives you kind of a taste of what kind of premium you'd be paying there. And we get those natural gas numbers when we come back at 10:30, 3 minutes from right now. Basil and I will see how that market reacts. Come on back, folks. Basil and I come back in 3 minutes with the natural gas EIA inventory numbers.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tommy O'Brien with Basil Chapman. We get the Dow up 149, S&P's positive by 14, NASDAQ positive by 71, almost 1%. And jumping back to that natural gas market, looks like we're getting some negative action in the price. We must have more inventory. We'll jump over to that number in a moment, but natural gas spiking lower. We're trading at about 285 coming into that inventory number, which we just got in the last minute. And you can see the natural gas market reacting. We're down to almost 283. And to refresh, we needed about 2 pennies, a little bit more than that, to cover both sides of that volatility trade. The initial spike to the downside, almost 283, and we're trying to get that number as it comes up, and we will get it for you, folks. But nonetheless, about 2 penny spike. We'll check back in on it, and as I go over to the contract, see where we're at, pulling up the news. Yeah, we don't have it just yet. We'll get into it, though. A little bit of a spike downward. We'll see what happens. Basil, jumping back to oil real quick, quite an acceleration. We were just at, overnight, almost $70, and we're now a solid $1.40 below. Pretty remarkable in that time span, and what we're seeing after spiking to almost, to pull this chart back even more, highs yesterday of above $71, and we're now talking about over $2.50 in the span of about 24 hours to the downside.
Within the context of the chart formations, there was a double top formed in the chart wave. It was a peak E that was made on the September the 3rd, I think 4th it was, at 71.40. This is the continuous contract, and then it pulls back very sharply to 67, and then in 3 days it spikes back up, and it just misses the previous high. It goes to 71.26, and now it's pulling back. But if you look, you remember we spoke about this in the crude oil, and what I said is, it's just always fascinating to me how a moving average that you would otherwise ignore. I'm showing you the orange thick line, especially made it thick because I was asked about it on my show the other day. And you can see, I'm going to squeeze this so that we can see the orange line is the 200-period exponential moving average, and it was jumping up and above and below back in August of 2014, and once it broke on the 5th of September, it broke down to 114. We're talking about crude oil, 114. You remember those days?
Definitely, right?
114. It broke down. We have not been even close. You didn't even have to think about this orange, this 200-period exponential moving average, because it was just unimportant until there was the rally that started back in June of 2017, just about 40. And it started to creep up, and it kept going higher and higher. It was walking the 9-period moving average and the 14-period moving average, and then it got close. It failed to touch the 200-period moving average back in in January of this year, but it kept struggling, and then finally went above it. Now I'm going to make this smaller so you can see what I'm talking about. And now all of a sudden, you remember I said to you this 200-period moving average could turn out to be quite an important magnet, both up and down. And this is exactly, it's amazing how this works. I've done this for so many years, hundreds of thousands of charts. And every time I look at it, I say, isn't that incredible? Look, that magnet line of 66.18, you go above it, you go below it. So that's going to be it's like an attractor. It's like it's got a magnetic quality. It propels just for a moment the price away. And all of a sudden, the 66.18 is really important, because that's going to be the key support that needs to hold. And you can see the monthly chart is still very good. But what's really important, I wanted to show you, we were talking about natural gas. Now, I know people don't necessarily use the continuous contract for trading, but it's really important for me just to give a sense of what the natural gas continuous contract is like. It gets smoothed out, but generally where it's going. And remember, I said to you, rectangle formations can last a lot longer than your patience. And meantime, natural gas has just been stuck between 2.65, let's call it 2.66, and the high it broke once above it, but basically 2.98. Let's call it 3. It's in the middle of this range. And you would think with the winter coming up, with storms, with the projection that we have about as many incidents throughout the year as we've had before, except everything is exaggerated. So that includes the weather patterns. So everything is like the storm right now. It's just a greater density than we've seen in ages.
Yes.
And look, you would think that natural gas, even if there is inventory available, you'd think that natural gas just on an emotional level would climb, and it's just stuck in this range.
And just to get that exact number, so it was a 69 billion cubic feet build. Consensus was about 68 billion cubic feet, so pretty much in line with what the market was looking for. And to jump back to the live chart, just to get a quick feel for that.
What's it doing?
You got to get away from that oil chart. The oil chart surprised me for a moment. Where's my natural gas? There we are. Oh, let me pull it up. My bad. We'll get in here. News. So we get the contract trading. It's kind of navigating right back to where we were. So we saw that initial spike almost to 283, and then we've kind of been meandering right back up to 285, which would kind of make sense when, you know, market's looking for one number. It almost gets that exact number. There shouldn't be too dramatic of a jump. I mean, when you're making that volatility trade, number one, you'd be hoping for a surprise in the market, so that the market responds, and then if it wasn't a surprising number, just that somehow there was something within that number maybe deeper in terms of they talk about demand and so forth. But nonetheless, the market just kind of, as you were speaking to, Basil, just kind of hanging out where it's been at that 285 so far this morning at least.
So you were looking at in the Nadex platform, you were looking at the outer bands. So the outer band, if you had bought the lower, you would have been able to get out of it almost immediately and then just sit tight and then whatever happened.
And just so you definitely, so the contracts I had pulled up were the noon expirations, and they had about 20 cents of exposure to the upside or the downside in either direction. And what's interesting here is if you pull this up, so right now we're trading at 284.3. These contracts are ticking in 1/10 of a penny. So basically you're going to have about 7 ticks of premium to the downside because we're at 284.3. And what initially happened is that there's still premium priced into these products. So when we were buying the bullish spread and we were selling the bearish spread, they were each costing us maybe $12 and $9, I think, on each side. And what you'll see here is that even initiating this trade, if you were going to be closing that out in terms of you still have premium to the tune of pulling back about $12, $13 out. As in, it cost you $21. You could close out both of them right now and recoup about 12 or 13. The main reason being is that you're paying so little money for intrinsic value. You're paying a lot of that for premium for the ability to hold that defined risk trade until noon. And guess what? You still have 82 minutes of exposure in those contracts that those will be priced according. And, you know, you could always close one side of that trade. Maybe, you know, you're thinking, okay, we didn't get the surprise we wanted, and maybe I'm going to close out the bearish trade right now that has the exposure. So you take $11 off the table, you cut your trade in half, and maybe you decide to let the bullish one run. Lots of ways to trade that, but nonetheless, we'll see what happens.
That was a prescient notice to say that the premiums were very small. Very good observation.
We got a lot happening, Basil, as I'm jumping around. We got the gold contract right now trading from 12.18 all the way down to 12.08 as we speak. And folks, we're going to be coming back with our man Jack Gleason from Major League Trading. We're going to be talking markets. We'll be right back, Basil and I, in 3 minutes. Come on back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Tommy O'Brien with Basil Chapman. We have the Dow up 122. We have the S&Ps currently positive by 13 and NASDAQ positive by 66. And maybe to my producer real quick, I'm getting a reverb somehow in my ears on whatever. There we go. I think we got it. And what we do every Thursday, 10:40 a.m. Eastern Time, we talk to our man Jack Gleason over at Major League Trading. Folks, you can head over to MajorLeagueTrading.com. Jack does great work over there, and he also does a lot of work. You can visit the Nadex educational webinars and Nadex market news right under breaking news on the front page of TFNN. Jack, good morning. Welcome back.
Good morning. How's it going, Tommy?
It's going great. And Jack, I know you haven't talked to Basil before. We got our man Basil Chapman. Basil Chapman introducing to Jack Gleason. Great to pair you guys up as we talk about this market. So, Jack.
Basil. I heard his name. I was like, we got a new guy. What happened to your dad?
Yeah, my dad, he actually had a little bit of a car problem this morning. He's going to be good. He's going to be in here rocking and rolling, taking care of business. But Basil picking up the slack, jumping into the co-pilot chair. Got to love it. And
those Ferraris run out of gas quick, man.
I guess they do, man. We'll go with that, sure. So, Jack, you sent over 3 charts, man. I got one of them up. I got the Dow. How about that? We'll start with the Dow.
We'll start with the Dow. So last Thursday I came on and talked about a support level I wanted to see trade. That was 25,758, which is a blue line on my screen. We ended up trading that. I believe it was a 6-tick front run. So the low was 25,764, and that was on Tuesday. Then we got that continuation reversal. So basically what I wanted to do, that was a premeditated support level. And you know, the Dow was at that point in time the strongest market. It was kind of levitating a little higher while the rest of the indexes were selling off. Dow, it was my anticipation to be the first market to get that new all-time high. We did get it here today. We're still backing off. The Russell can't follow through. However, what I'm going to be watching moving forward is the profit target measured from that entry that traded on Tuesday. We talked about the previous Thursday. Mark it on your chart. That is 26,387 for you. So that's what I got for the Dow.
Nice. The markets are rocking, that's for sure. We might get that one today, man. We'll see what happens. Okay, NASDAQ. You want to talk about rocking? Where are we? We up a full % in the NASDAQ today? We might be.
definitely were at one point. I think we might have backed off a bit. But yeah, NASDAQ, great reaction out of these lows. I really want to see us kind of hold above the 75.25 level here today. If we don't, I think we're going to get a deeper pullback. I don't think it's going to be that continuation breakout that people were anticipating. So right about where we are, I want to start seeing some bids come in. But basically, I did want to bring out a higher time frame here. Just be aware of a couple of upside resistance levels. I mean, a few weeks ago, starting on the 24th, NASDAQ had a big breakout. We failed to hold that breakout. We came right back, retested those support levels. If we hold here, the next move, I see us going right back up to highs. And if we can break through highs, also my profit target on the NASDAQ is going to be 78.22. What we ended up holding on those lows, if you go back to the low of the end of July, that's July 30th, to the, I believe it's the August 30th high. That number divided by 2 was the 74.32 zone, which is the middle of the screen.
Yep.
That's that highlighted green box. So we traded there, I think, what was it? We traded there yesterday, Wednesday, Tuesday, Monday, Friday. Thursday, every single day, it was like buyers coming in, buyers coming in, buyers coming in.
Nice. And you said that's the 50%, Jack, right? We see that bar from that July 30th up until August 30th. Is that what you're looking at?
Yes, that's correct. So from that low to high divided by 2, perfect touch, leg start retest. That's where we broke out from on the, what date was that? Was the 23rd of August. That was like really an ideal entry from multiple different technical standpoints. So I'm making myself aware of that upside negative 23% profit target, which exists at 78.22. That's that top green line on my screen.
Nice. Right up there. We got it. That's a high one. We'll see if we get there. And
it'll take some time.
I like to see the oil, man, and you might have to send us a refresh chart with how fast this oil market's moving right now.
I know, I had to throw that in. So on the screen there, you can see that lower levels, 68.35, which I believe is very close to the low right here. That was kind of my extended target downside here today. But really what I'm anticipating us to actually take out last week's low on Friday. Still want to see that bigger level trade where I have that highlighted box. 65.78. We did a double top situation reversal, the high from the 4th of September, right near 71.20. We came right into that level, rejected. If you can see that white dot on my screen where that horizontal line begins on the 4th. So basically what those dots measure, it's a code I had written. It measures a 3-bar move, the beginning of a 3-bar move, whether that's to the upside or the downside.
And I'm sorry, Jack, where's that white bar?
So if you go to basically the highest point where that 71.40 high is.
Yes.
So I have all those dots on my chart. They're basically the white ones are, I call them swing. I call those leg starts, which is the beginning of a 3-bar move in any direction. So we have a 3-bar move lower, and I just noticed at those levels when they retest, we get rejected.
Nice.
You know, and the bigger the sell-off, the better the resistance level. So we had that rejection yesterday, post-oil inventory, continued sell-off here today. I'm looking for the lows of last week to get taken out, anticipating a stop run down into the 65.78 level, and that's what I'm looking for my next long opportunity.
Yeah, I mean, it almost seems too easy sometimes in hindsight when you look at these things, right? In terms of pushing up. No, I mean, I agree. I said this morning, as you know, I was talking to Basil at the beginning of just the show when oil dropped solid dollar, I think, from 10.05 to 10.25, and just even going back, 24 hours ago from that 71 point. And man, those are critical levels when oil. You start reaching over those $71 price points, and that's a level that's faced some resistance lately, let alone when you peg it literally to almost the penny of where it's been at. Getting that acceleration all the way from, I mean, like you said, we have that point going from $64.43 up to $71, and then we challenge it again, and we're back. And, of course, you have the hurricane out there. You have a lot of volatility coming in over the weekend.
Speaking of hurricane, I'm repping the hurricane right now, North Carolina. Let's go.
Oh, man, that's right. Well, so tell us what's going on. What's the feeling like, man?
I'm in Chicago, so we haven't been hit yet.
Okay.
But my business partner lives in Virginia, and he's all concerned that they're going to get swamped. But they were telling him they're going to get 11 inches of rain, and he's got a baby due on Friday. So I'm like, oh man, good luck.
Oh man, I know that's where things really stay safe, man, and no matter what, right? That's remarkable. Well, hopefully he stays safe himself, and newborn baby on the way. And tell us about where are we in the plans of Costa Rica? When's the move to Costa Rica as well?
The Costa Rica move is happening. Right now I just bought myself a really cool drone, so I'm gonna be taking. I'll send you guys some footage.
Awesome.
I got the fishing trip booked for you guys, ready to come down.
We're gonna get those plane tickets, man. We are. It's happening. We're gonna be live from Costa Rica, folks. Jack Gleason, Major League Trading. You can head over to MajorLeagueTrading.com, and of course, Jack does some great work over at the Nadex educational site. You can get over there at Nadex Market News, right under the breaking news tab at TFNN.com. Jack, thanks for the awesome charts as always, man. You
Thanks
have a great week,
guys.
And send the best out to your business partner, man. Make sure he stays safe out there, and we look forward to talking to you next week.
Thank you, Jack.
Hey, thank you, Basil. Good talking.
Awesome, man. All right, folks, come on back. We'll finish up the show. We got markets rocking. We got the Dow right now up 89 points as things are pulling back a bit. Come on back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Tommy O'Brien, joined by Basil Chapman. We get the Dow up 79 points, S&P's positive by 10, NASDAQ positive by 56. Basil, since we've been on the air, we've seen the Dow pull back about 100 points, giving up some of the gains. Excuse me, we've seen the NASDAQ give up about 26 points, and so a little bit of weakness sneaking into the market.
So that's this whole rotation thing. And what I said to subscribers this morning in my opening call, my daily newsletter, is that the 120-minute chart, if it broke above 26,145 in the Dow, that would go to a Chapman Wave 5, one of the techniques that I've developed over the last couple of years. And that says, be careful at that moment. Well, we hit 26,191. We're trading at 26,084. Very sharp pullback. And we're also getting some kind of a pullback in gold. And that's what I mean by these one-day phenomenon. You've got to be real careful because, look, the dollar is holding the 94.50 area. That 94.40 is really important.
Okay.
So we got a lot to look at in the show today at noon.
Perfect. And folks, you heard Basil talking about it. He does an outstanding job. I got his newsletter up here, the Chapman Wave. You can get there by going over to TFNN.com. You hit the newsletters tab. You click on trading newsletters, and new subscribers, you can get in there, get a 30-day money-back guarantee, and you get access to all those charts first thing in the morning to get a jump on that market and see what Basil's talking about with his subscribers. Basil, thank you so much for filling in this morning. I always appreciate it, always enjoy the program, and we look forward to the Tiger Technicians Hour coming up at noon today.
Thank you very much, Tommy.
My pleasure, man. Folks, stay tuned. Coming up right now, Fast Market, of course, Kevin Hinks, Tom White. They're going to be talking about some of the earnings. They're going to be talking about Kroger out there they talked about. And, of course, right after that, Basil Chapman at noon. Then we got Steve Rhodes, Dave White, and Tom O'Brien will be back this afternoon. Have a great one. Stay tuned. Fast Market coming up right now. Thanks, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.